Hi, this is PR Sundar. Recently, I came across something very interesting called ESG Criteria. And before going to that, let me give you some news. Every analyst, I'm not talking about technical analysts, I'm talking about fundamental analysts. Everyone has been recommending ITC shares for long-term investment. It is offering a good dividend yield of more than 5%. That is better than bank fixed deposit rate. And it is a professionally managed company, and they are into three major areas. One is cigarette, second one is FMCG, and the third one is hotels. But despite so many people recommending, despite such a good dividend yield, and the share price keeps going down. And today, it has traded around 180 rupees. At this rate, the dividend yield alone more than 5.5%. And still people not showing any interest. I was told by one of my friends that nowadays people, not only individual people, even certain funds, they look into ESG criteria. So what is ESG criteria? ESG stands for environmental, social and governance. Let us look at Investopedia, the definition. What are environmental, social and governance criteria? Environmental, social and governance criteria are a set of standards for a company's operations that socially conscious investors use to screen the potential investments. Environmental criteria consider how a company performs as a steward of nature. Social criteria examines how it manages relationship with employees, suppliers, customers, and the communities where it operates. Governance deals with the company's leadership, executive pay, audits, internal controls, and shareholder rights. Let me try to explain in simple terms. First one is environmental. Let us say there is a particular industry which gives more pollution. Then people do not want to invest in those kind of shares, and because the pollution is not good for our planet. And second one is social. Let us say a company employs child laborers, or a company is not paying their employees very well, not taking care of the employees. So that is a social issue. And governance, I don't have to explain. It is the policies of the company and corporate governance. How fair the people who are running the company. So here, ITC is mainly seen as a cigarette company, and smoking is not good for health. And therefore, many people keep away from ITC. So that is an interesting argument put to me by one of my friends. And there I learned this ESG criteria for investments. Another reason why ITC has not been doing very well, not only ITC, in general, all the high dividend yield stocks are not doing well. Until last year, there was no tax on dividend. The dividend is tax-free in your hand, and however, companies pay roughly about 20% dividend distribution tax. Let us say one company decided to give 120 rupees as a dividend. They have a surplus cash. What they need to do, roughly 20 rupees they will give as a dividend distribution tax to the government. The remaining 100 they will give it to you. So you get 100 rupees as the dividend, which is tax free. But now what has happened? The government said there will be no more dividend distribution tax, but the dividend will be taxed as your income. So ultra HNI clients, nowadays they pay about 42% as tax. So now the same company has 120 rupees and they give the entire 120 rupees to an ultra HNI client as dividend. That 120 rupees becomes his income and he has to pay around 42% as the tax. So that translates into about 50 rupees as a tax outflow. So receive 120, pay 50, that means he gets only 70 rupees as the post-tax return. Last year it was 100 rupees post-tax, now it is only 70 rupees post-tax. So because of this higher tax incident, the ultra HNI clients are not showing interest in buying high dividend yield stocks. So this is also attributed as one of the reasons for underperformance of ITC. I have also invested in ITC. Let us hope things will turn around soon. Thank you for watching.